our new home in general, in terms of time frames, will be the M5. Okay, from every time on, you will see a chart from us. Always expect it's being the M5 minute. Okay, because obviously from now on, we're starting to break everything down as a more clearer cycle. And that's how we're doing the intraday approach to the whole overall concept. Okay, and you will be surprised how much clarity in overall the Asia ranges and sessions and whatsoever will bring to the whole table if you just use these little tips. And of course, we give you a slight introduction about it in overall. But first, understand 5-minute charts. Again, if you see a chart from now on, that is the 5-minute chart. Okay, if not, then we say it otherwise. Okay, the different types of inducements, as a few people already are asking, even in terms of the bigger picture of structure. And it's very important to understand also that there are different types of inducements, because we can structure it in overall about minor inducements, medium inducements, and major inducements. So let's dig into the minor inducements first. And as you can see already, that is of course now a 5-minute chart, right? And as you can see, it's labeled minor inducement. So what does this mean? A minor inducement needs to be done mainly based on intraday lower time frame structure being the M1 and partly the M5. What do I mean by partly? I will dig into it when we cover the medium ones, okay? But overall, minor inducements are on the 1-minute and 5-minute charts. So you see these blue lines, that means that's inducement. So why is this an inducement, you ask? Guess what? There's the liquidity buildup, right? Slowly channeling short side. And of course, inducing this lower. But guess what? Before they continuing lower, they're inducing this minor structure in here with even this wick higher to go lower, right? So guess what? Is the channeling upwards, they're creating this structure point, inducing that one lower to go even higher, right? And in the process, that would be like a very juicy entry opportunity for us later. But even this little structure in here gets a pullback, induced higher even once more to move even lower, push price even way lower, inducing now this structure in here, grabbing the liquidity short side, inducing all the people short, building up this channel selling, right? Of course, now breakout traders, that's the final and last step for even adding so much more sellers. And of course, what they're doing afterwards, moving upwards, creating these little structures in here, inducing them low to do what? Exactly, to go higher, building now this false uptrend in here, inducing now this overall higher highs with this major major candle in here. We will call it vector later on. Of course, we will teach you exactly what that is going to mean, right? And of course, after that, even this structure is getting induced even once more, building up the liquidity in here first, giving false pullback, of course, becoming smart money trap in here, giving the false reaction, and then of course final inducement, and of course after that the pullback area to finish the day off. Okay, so that's how you identify minor inducements, just by these little intraday plays. It's super important though you get used to those, because they make a huge difference depending on how much you want to trade. Because as you can see, if you just identify these proper inducement areas, of course this would be a short trade, this would be a buy trade, this would be a short trade, this would be a buy trade, this would be a short trade, and this would be a buy trade. And already you can start seeing how we can use these inducement concepts to getting very solid trade out of that, don't you? Right, of course, but that's not even fairly enough to start trading about it. It's just to understand like the bigger picture aspect to it. So now we can even add more to it, right? And start. Oh, why does it not work? There we go. So now we can start adding medium inducements into the whole picture. So what does that mean? Medium inducements are overall picture or structure inducements that are not on an intraday level, but also induce something which is on an external level. Okay, I will tell you what that is later. Obviously, some of you already figured it out what it is. Okay, but medium inducements are usually inducing structure from a different day. Okay, so just a quick hit, for example, that is yesterday, and this was starting of today. Okay, and as you can see, this point in here induced the major structure of the previous day, and this signalized that the day was ended and this is a new day. So this is a yesterday's point, and that got induced by this area in here. And then obviously the short trend comes after grabbing this liquidity. Okay, so this becomes a medium one. Okay, what else can we do? Medium inducements are mainly based on combination of multiple days, right? And requires to look to the left, can be the M5 and also the M15, right? Or of course, like just a previous day structure. So the moment you're looking to the left and will ever see something like a structure point in here, that is way more to the left and even more than yesterday's structure, that is immediately called a medium inducement, right? Because this actually induces multiple time frame and also multiple days liquidity. Okay, same thing with being in here. If you can see, this day starts in here. This is a major point which obviously gets induced later, pullback, and then of course minor inducement in an intraday level, inducing low. This becomes a decisional point in here. After inducement, gets into it, mitigates it, and then can go lower, and then you try it in line with the overall trend, heading towards that areas in here and grabbing those liquiditous areas. Okay, so medium becomes like outer intraday structures and higher time frame structure, and minor is everything that has a minor impact on the same day, being the 1 minute or the M5 minute. Okay, so of course, then we dig a little bit more deeper into that. What do we do have in here, right? Inducing new highs with speed. That also is a medium one. Why is it a medium one? Because again, this is also the highs of the last day, plus of course induces these areas in here with speed. You will see these candles a lot in these areas because again, that's the final stuff. The moment they're getting the last impact and creating all the FOMO for the people before, of course, they can grab the liquidity and then move lower than that. Then this one becomes a minor one. Why? Because this is only internal structure, induces low until it goes higher and goes for the next medium one. Okay, then what do we have else? Right, this one in this case was already the medium because this point in here induced this structure, which was a previous day. So this by itself was the medium one, and this becomes the minor one. But for the internal trade or pretty much play, this will be the way more important one, and I will show you exactly why that is. But just keep this picture here in mind, please, because it will keep a huge role later. Right. So again, this one just being a minor one. Why is this a minor one? Even it's something on the left, because this did not really have any impact at all. Okay. It's just in the middle of the whole run, and this is just in the middle of it. Of course, it has a slight impact. Okay, and then of course, the main thing is we aim for the medium inducement in here, which is the whole push that obviously led to the whole new highs in here. That becomes the liquidity area. Again, you should target that, and of course, that's where price heads next to. Okay, so then what we have in here, we have major inducements. So major inducements are pretty much the main structure on the higher time frames. This can be everything on like 50 minutes or even 1 hour or even higher, right? So everything 50-minute based and higher will be called major inducements. And they usually go really rapid and have the most significant impact of all. But as you can see here, that's like really main structures in here. And of course, first liquidity gets built up with this equal highs in here. Does not really induce these zones, more like builds the liquidity. Guess what happens in this internal play? First induces this highs. Simultaneously builds liquidity in here with this equal highs. Induces low with this minor one just to push price higher. Grabs first of all this zone in here and then goes for the medium inducement in these areas to grab the higher time frame liquidity. Look at the channel they're building, huge momentum, huge candles in order to break the whole zone in here. Takes everyone the long side, just grabs every liquidity and obviously then can push lower. So the next target in this zone in terms of liquidity, as you already can see here, that's a lot of equal lows in here. Of course, never been tested, never been induced. So of course, that will be the next logical area you should aim for with this trade. Okay, it's all about liquidity zones getting induced over and over again. We also have internal inducements. How we have internal structure, we will also have internal inducements. You have your main push, right? Everything that is inside this push is called internal inducement. For example, you're having this build up in here, creating these equal lows, having this false break or a new higher high in here, makes the final inducement. It's internal of this push though, so that is called an internal inducement. Does the same thing in here, now makes an internal break of structure of this internal push, right? Now makes another internal break of structure, and then before it can move higher, it induces this point in here lower, but also just becomes the internal inducement. And what we have learned later or earlier, again, you can take this zone now as a point of interest and refine it with, for example, imbalances, as this is already an inducement zone in here, and price comes back to mitigate these areas, or it's obviously the structure of the internal break of structure in here, the extreme of that. Okay, in this case, the decision would be induced, and it comes to these areas with the imbalances left. Okay, and then of course we also have external inducements. External inducements means, of course, everything that is not internal pushes. So if you see this whole structure in here, you have these equal highs or aka liquidity. Also this pushes in here, see all this pushes in here, and now it induces this external push, right? It's not even included in this push anymore. It induces this push and also becomes immediately a medium inducement, as induces the higher push or the higher structure just in order to grab liquidity, becomes the point of interest in here, makes the same thing inside here, right? Of course, that's an internal inducement now. Why? Because creating internal liquidity, inducing it before it can go lower, mitigates this type of order flow in here. And the target should, of course, be the next liquidity area. What does it do before? Gives a slight reaction to fake it, right? And of course, induces the liquidity now, and then it can reverse again. These would be reversals, of course. Usually an inducement causes a reversal in some sort. As you can see here, obviously, in the lower play, this induces short just to go higher, and we're obviously interested in this taking buy inside this area later. Of course, in this inducement creates the liquidity grab in here, and we obviously are interested in this buy or in this buy with the mitigation retest. Same thing in here. We will take a look at this sell, and of course at the mitigation sell of the inducement, and later on after an internal break of structure. Of course, this is now the decisional level. You can look for mitigation in here, or if you like the better internal break of structure, you're looking at the imbalance area in here, looking for mitigation